It's Thursday, March 29th. I'm Tony Oz and welcome to Stock Trader TV. Before we look at where the market's closed today, let's visit the S&P chart and analysis for March 25th. This will be our breakout point and also our 38% retracement back down. This is a 50% and this will be a 62% retracement. So we can expect if we do get a pullback to here to be a good buying opportunity. So looking at where today's action took us, from last week we wanted to pull back to this line, or this line actually between these two lines, seeing a first sign of strength and buying it on the intraday chart. I think what's funny here that I picked up the S&P index, which ended up being the strongest index of them all, as it didn't give us a pullback to the previous resistance levels or the 50% retracement on the Fibonacci's. But if we look at the NASDAQ, for instance, if I would have picked that, you could see that here are the levels of the resistance. Here is the Fibonacci from the low to the high. The retracement of 50% hit exactly on the nose today, on the low today, and then a rally that made a hammer, which is a good short-term reversal pattern. But normally with hammers, if you go and buy the continuation the next day, you're too far away from the low on a stop loss. So unless we got in right here, we pretty much don't have the trade. Now the reason I'm showing this to you guys is so you understand what happens on a down day on the intraday chart. Let's look on the intraday chart. So this is a one-day chart, 5-minute candles, and we see it open, went lower, went lower, went lower, made an eventual low and rallied. So how do we play this in anticipation of potentially reversing? We knew that 2400 to 2407 or so were the levels, here we can look at it again, were the levels of these two blue lines, right? So a little bit lower than 2400 and about, I would say 2407 or so would have been these two levels here. And let's go back to the intraday chart here. And you can see, so it's about from here to here, that's exactly the level that we could have expect a reversal. So what we want to see is higher highs and higher lows. So we have lower lows, not higher highs, no higher high, going down here. And here we can see a low, right? And there's a rally. There's another low and a higher high. So a higher low, higher high, quick one. Could have bought that. Breakout right here. For reversal with a stop loss below the low today. Very minimal risk in this case, especially if you're looking all the way up to go back to the top of the channel, which is all the way there, right? So our risk here in that case was very minimal. Let's look at it again and say, all right, I'm not convinced, I'm not buying it on this thing. Let's see this pullback here, and you can see how all these lows are holding, making a little base and then another breakout. So that would have been another good point. Could have potentially put a stop loss below these lows or these lows. Again, great reward to risk ratio on trading the market. Let's look at the Dow on the daily chart as well. This is Nasdaq. Let's look at the Dow here. And the Dow, the same thing, rallied from this point. If I run the fibs, the 50% retracement is here. Didn't quite hit it. Went underneath these highs, which are the 12,350. Actually, yesterday, it didn't take out yesterday's low today, which showed some strength for the Dow. Okay, the Dow today was stronger, which an index of 30 stocks could outperform in certain days. But again, if we were to buy this, placing a stop loss below this low, that low at this point, could it still maybe give us a 3-to-1 reward to risk ratio going to these highs? Now, not that I recommend buying at this point, it's just a thought for you guys who are bullish. For me right now, this is, if I look at this as a channel, this is the middle of the channel. It's very hard to take a trade once a bounce took place, a little bounce even, because it gets very close to the top, okay? So from here to here on a stop loss is almost as from here to here on a price target. That's why we need to be in the trade pretty much at the lows. That's why I anticipate these things happening when the chart is here, when price level is here. I anticipate this coming down. And this takes me to a great question I had from one of you about the stock picks that I've been giving that are breakouts and waiting for a pullback. To say, Tony, why are you waiting for a pullback? Why not just a little consolidation or something of the sort? And so let's look at some of these. Here is a case study of a pullback play after a breakout to 52-week high, And basically, I called this one when the stock was trading right here. I gave it on the first newsletter. Let's have a look at that. And this one already started its uptrend and started to correct. Already starting the correction here. And if we look at the 30-day with the volume, you can see the volume came in here. That was the first time it moved up. A little bit of digestion of the initial move. Kept it moving up. You see the volume is increasing, even though on a down day here. What we'd look for again is if we look at the intraday chart is a pullback to about the levels right here, which is around $16. I think that'll be a good safe entry with a stop loss below maybe these lows and looking up for 18 and possibly even 20. So let's look at SMSI again here, and this is when we called it. We called for about 16. If you looked at the tops of that intraday chart, it was about actually 1580 or so, which is exactly where the stock kind of based here, about 1580 or so. Middle about 1546 or so, I remember, but it did not take out the lows from the consolidation level that we looked at in the intraday chart. And the stock went up to 2004. So it actually, here the volume came in one day and just took off. Let's look at the one with the volume again. Here's the volume coming in, stock taking off, and here's your price target, 18 to 20. New breakout, test of the previous highs, keep going up, 2004. So if we were patient to wait for this pullback, consolidation, and staying in that, not getting stopped out, here came the reward with a nice breakout, and you can do the math from 16 to 20. That's more than 20% return. So that's a really good reward for the patient guy who knew the setup here, waited for it to take place, sat in it, and then got rewarded. So I mean, this is basically what I try to teach is patience. When you see these breakout moves, to wait for these retracements, get in on them, sit tight. This tells us this volume here, okay? This is what's going to tell us this stock is going to be strong and continue to be strong, okay? All this volume increase on the breakout. So when it retraces, look how the volume died out completely, way below that moving average throughout this whole consolidation level. Guess what? Volume coming back in, stock's moving up, and this is where we cash in on the move. So I guess you're now noticing one thing about the picks I give you guys. They don't give you a trade the next day immediately. They require something to happen to set up the trade. And that's what it's all about. I get all my results right now from the odds scanner. The ones that are not triggering trades today, I put on my watch list. That becomes my daily watch list. I know where I want to buy these stocks. Here's an update for you guys who are interested in the contest that's going on CNBC right now, the $1 million contest. WinTheMillion.com will be a website in which I will do some picks and strategies for this contest. I want to separate that from the serious stock trader stuff, the ones that we actually do for a living. So for those of you who are interested, WinTheMillion.com, this website will go live next Thursday. And I will not talk about that anymore on this site, so you may just want to type this in, bookmark it, and visit that site if you're interested in the contest. Anyways, this is all the time we have today, and thank you for joining us.
Before we conclude our program, enter your email address to receive our free real-time alerts. And remember, this is not financial news, it's Stock Trader TV. Now go make some money.